Well, it's a really quiet data week this week, but we are looking for a CPI for July that's due to come through. Market is expecting around 5.5%. Is that your expectations?
Good morning, Mashudu. Yes, this week we only have CPI data release out, and we're expecting 5.2% year-on-year, a moderation from 5.5% year-on-year in June, which is in line with the market, with the consensus. And we believe that the moderation is likely to come from lower food and petrol prices. Remember, in July we had petrol prices declining by 85 cents a litre, so that we expect transport costs to come down a bit in July. But we expect the upside risk to inflation to remain, mainly from higher food, international food prices. As you know, there are droughts in the US and Russia, which is expected to push food prices upwards, and also upside risk from administered prices, as well as increases in petrol prices. At the moment, we have petrol prices at the under recovery of about 78 cents a litre, which means that we can see petrol prices increasing again in the beginning of September.
A very interesting data point was the retail sales numbers out in last week's trading session, up at 8.3%. Would you say that's a true reflection of how consumers are doing? Are consumers faring better than what the other data points are suggesting?
Mashudu, I mean, on retail sales, the main thing is that it's at odds with consumer confidence index, which we saw it declining in the second quarter of 2012. And also, when we look at the credit number, we've seen that household mortgages have also continued to moderate to around 2%. So we think that the anomaly really has to do with credit growth and household credit demand. And we believe that the growth in mortgage advances paints too gloomy picture for household spending, while retail sales are painting a too rosy picture for household spending. And we believe that the truth really remains or lies between the two indicators, and we're likely to see what household really, how it held up in the second quarter when GDP numbers come out at the end of the month.
GDP expected out at the end of the month, but like you say, there's an upside risk to inflation going forward. With that scenario, are you perhaps changing your interest rate outlook for the rest of the year?
No, we haven't changed our interest rate outlook. However, we do appreciate that demand indicators have remained quite strong, which means in the near term we are not expecting any rate moves, and we are likely to see rates remaining on hold at the moment, given the fact that inflation is still remains within the target range. And yeah, so we're not expecting any move at least in the next 18 months.
The Reserve Bank is also due to release its leading indicator. What can we perhaps see from that front? Because we have seen the index really trending lower.
Yes, it's been trading lower for the past couple of weeks, and I believe that it will also continue to trend lower in the next few months as well, given the fact that also we had things like the mining sector remaining quite weak, and there's still downside risk coming from global demand.
Talking about the mining sector, looking at what's happening at the Lonmin Marikana mine, some investors really saying that that situation is having somewhat of an impact on investor sentiment and on the local currency. We did see the rand trading around 8.33 this morning. Looking at the rand at this stage, how much of an impact is that situation having on it?
On Friday, it had a quite material impact on the rand, and also we saw South Africa's CDS spreads widening on Friday, and this was also just out of step from what we were seeing in other emerging markets. So we believe that a lot of negative impact from the rand was from the Lonmin strikes, and also another thing is the bond sellers. Actually, we saw a lot of bond selling in the market also on Friday. So going forward today, I think the rand will remain volatile, especially, given that fact that we're still having negotiations between lawmen and the unions. So it remains to be seen whether the conflict subside and what's the way forward in terms of negotiations.